This is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 2nd of August. Starting off with the FTSE 100, where we're still above the 200-day moving average. That's around there at 73.60. That was the neckline resistance as well for late in June. So above that, we don't really have much resistance on the daily chart between here and 76.50 post-February resistance. Obviously, we've got the excitement of the Bank of England trying to destroy the economy with a large interest rate rise later this week, but at least on a technical basis, above 73.60, we should head towards the 7600 zone, maybe even as soon as the end of this month. 50-day and 200-day moving averages both rising. That should mean that we're in the run-up to a golden cross, which should be the strongest part of the technical cycle. Let's see if that particular theory works out. On to Bitcoin, where there is I suppose we're still waiting for the big breakthrough. Doesn't look like it's going to happen now, though, but we had an old range, 19,000 to 22,000. Managed to get up towards the 24,000 area, nearly 25,000, but couldn't quite hit the old May support, 25,400. So that's a bit of a negative, as is the double top below that. We had a falling trend channel there from March, just managed to peek through that over the last week, but we have the risk of at least a test of the 50-day moving average area around 21,300, even if this market manages to get back on its feet again and take out 25,000 plus. Below the 50-day line, support at 19,000, and below that, then we could resume the decline from the spring. 15,000 and then 10,000 are the possible nightmare scenarios that would bring. Moving on to the stocks and starting off with Ascent Resources, which presumably one day will make lots of money from the Slovenian government. But in the meantime, we have the shares gapping up off the floor of that rising trend channel there from September. That's support there at 3.4 pence. Above that, obviously, we've got the old April and May peaks at 4.2, but the overall pattern here is that we're in a rising trend channel from September, and that could give us a 5 pence plus target by the end of next month. The reason for some confidence in a potential near-term recovery here is that uptrend line in the RSI window that's been in place since December. We've had no new lows since then, so that does suggest that maybe the shares are ready to make a move, especially with the latest gap to the upside today. On to a Vactor, which I know has its fans, some of them very well informed as well. Here we've got a situation where almost looks like a inverted head and shoulders here, really, from over the last year. So the head there from in March, April, right shoulder now. And I suppose we've also broken a line of resistance there from back in April. That was around the 115 level, and above that we're looking for a retest of the best levels of the past few months, so up to 140, or even 150 actually, which would be that resistance line there from back in September. You can see 140 or 150 maybe by the end of this month, as long as we remain above the 50-day moving average at 111. That's starting to rise, so that does give us confidence that there could be a little run-up in a Vactor over the next few weeks. On to Angle, which from memory was raised some money recently, but here we've got a situation where the old resistance, old support rather, there from back in March is looking to start to become new resistance. We'd like to see the shares remain above that March low there at 71. Above that, though, we could fill the gap up towards 90 pence, the gap down from last month. And maybe we would see that by the end of this month if we could stay above 71 pence on an end-of-day close basis. Ideally, if you're a bull, you'd say that the 2 days that we spent below 71 pence were a bear trap. Also got a bit of bullish divergence there, so lower low for the end of July, but the RSI trace actually a little bit higher, so that does give us confidence that we have a positive setup while we remain above 71 pence. Requested stock next, and here we've got Angus Energy, which is, I suppose, the main mystery here is why it's just taking so long to go up. It's in the right space, it's in gas, etc., etc. Looks like all the dirty work's being done as well in terms of funding and all the other paraphernalia. Rising trend channel here from October for the channel there at about 1.1 pence. Above that, we're looking for 2 pence, maybe over the next 1 to 2 months, but clearly there's some resistance to break there around the 1.4 pence level. But the setup does look to be in place, and the floor of the channel looks also to be in place for Angus. Moving on to an unlikely recovery situation, Cellular Goods, after the beating that it's taken so far this year, but looking better by the day, one would say, actually. So we've got a situation where we had a great close yesterday above the 50-day moving average at 1.3 pence. Opened at the low so far at the high of the day today, so it looks like we've got legs here. And initial target around 2.1 pence, which was June resistance, but actually looking for the shares to fill the gap there up to the April gap there up to 3.2 pence, maybe as soon as the end of next month. So looking pretty decent. I suppose the start of the recovery here was the break of that resistance line there from April around a penny, and then we had the sideways shuffle, as I call it, and now we've got a rising 50-day line. So quite confident that there'll be at least an intermediate run up here towards 2 pence plus, which I suppose would be a bonus given the recent history of the stock. Another requested stock is Europa. And here we've got a chart a bit like the one that we've seen at Angus, where we've got a rising trend channel, but the shares haven't actually started to build up through that. But the channel there since this time last year, and above the floor of the channel at 2.1, we're looking for 4.5 pence over the next 2 to 3 months. Obviously, we would get through that resistance we have there around the 2.6 pence area. But if you're a fan of the shares and with that rising 50-day moving average, you probably have enough to go on in the sense that you'd say that we've spent enough time consolidating and we are ready to head higher. On to Hydrogen Utopia, which is looking also very strong. Here we've got, we had the initial idea that there was a recovery here with the 2-day island gap, bear trap island reversal below 5 pence, and that was in the early part of last month. That signal worked well, and since then, really, after breaking around the 6 pence zone neckline resistance, we've progressed very encouragingly with the very strong candles there, generally opening at the low, closing at the high, and we did that yesterday as well. So looking for 12 pence. I was looking for 12 pence by the end of this month. I think we're on course for that at the moment, especially while we hold above the 8 to 8.5 pence area, which was the neckline resistance from back in April. Another aqua stock, which is looking rather better than it has done for quite some time, is KR1. And here, if I can draw in a proper trend line, we could see that the shares right on that trend line there from back in November. So we would like to see 48 pence plus on an end of day close basis. We had a double test of that, so hopefully the shares can get through there later this week. Beautiful saucer reversal there for the stock. In fact, you could say it's a cup and handle because that's the handle there over the last week or two. We've got a rising 50-day moving average, which is a very good and simple indicator in terms of recovery. Through 48 pence on an end of day close basis, one would be looking for the last resistance on the way down, which was really back up to the 80 pence zone. There's a gap to fill there around 57, so maybe that's the initial target for people, but could be back to 80 pence, old support and old resistance at the same time with that saucer-shaped reversal that we've got in place. And we're also backed by bullish divergence line there from May too, so that should give the shares decent momentum, if only for another 10 pence or so. This stage only back below recent support there at 38 pence, really delaying the recovery scenario. Another crypto-focused stock, which seems to be recovering as well, is Mode Global. Here we've come out of this falling wedge, which has been in place since March. We've had bullish divergence twice, actually, in the recent past. The first gave us a rally from around the 6 pence area to 10 pence. On this occasion, looking for a recovery from 5 maybe to 10 pence. And yesterday's close really breaking that line of resistance from April. Pretty powerful. Bullish divergence lines should also provide momentum here to get to 10 pence, maybe as soon as the end of this month. Upside value while we hold above 5 pence. I think that's probably the best stop loss of the moment. Onto a stock which I hardly ever look at, but looks like we're just trying to break out here as well with PCF Group. Saucer type reversal here, bear trap saucer actually, and bullish divergence too. If you're cautious, maybe wait for the shares to break the 4.25 pence area, the neckline resistance, or 4.4 actually pence area neckline resistance, and the 50-day moving average. But looks as though the shares have done enough to indicate that they could head back towards former support, and the bottom of that gap down back in May around the 7 pence level, maybe by the end of September. Although obviously this is not a very liquid situation, so maybe one has to factor in the risk of this being a false move. Finishing off with another stock which I hardly ever look at, but here we are, Trellis Healthcare, or Trellis Health actually rather. Here we've seen the shares coming off very oversold levels, and with the gap higher yesterday, looks as though there could be a chance for the bulls to take the shares up to 15 pence in the 50-day moving average, while we hold above 9 pence, which is the floor of yesterday's gap. That's it for me today. More updates tomorrow.